Hello, folks. Welcome to another episode of Wu Says. This is where we get real about the US, China, everywhere and everything in between. Is two superpowers, but one global story. Now, in the last episode, we began the first part of our mini-series on the Asian financial crisis, where we explored the big picture, the why it happened, the competing explanations for Asia's economic collapse in the 1990s, 1997, 1998 to be precise. Now, in this episode, we'll zoom in on Malaysia. How did the crisis unfold here in Malaysia, and what choices were made that set Malaysia apart from its neighbours? I'm Melisa Idris, and joining me here to unpack all of this for us is Professor Thye, who during the height of the Asian financial crisis in 1997 served as the Special Economic Advisor to US Treasury Secretary Robert Rubin, who was then under the Clinton administration. Prof. Wu, let's talk about Malaysia before the storm, so before the Asian financial crisis. Before it hit the region, talk to us a little bit about how strong Malaysia's economy was. Were there vulnerabilities kind of simmering under the surface that made us more precarious or more vulnerable to when the crisis hit?
In the 7 years before the crisis hit, Malaysia had a boom. The growth rate was over 9% a year from 1990 up to 1997. In 1997, which was the lowest growth rate in that period, it was still 7.7%. The reason for that big boom had to do with the fact that there was a shifting of production away from Japan and the United States towards Southeast Asia. And this is what that had caused the World Bank to produce a book in 1993 called The Asia Miracle. Now, there was great optimism because Southeast Asia had cheap, educated labor, which multinational corporations wished to employ. And the other thing was, it was an easy time to get capital. Japan had a zero interest rate policy at that point. And if you can borrow money at zero interest rate, it's a very good deal. And so Southeast Asia rightly borrowed. And when people borrow, the one thing that they are constantly nervous about is, I am borrowing in US dollars. If the exchange rate were to turn against me, then I would end up owing more money in my domestic currency than I had expected. For example, Malaysia's exchange rate from 1957 to up until 1991 was roughly 3.1 ringgit per US dollar. And when the dollar started weakening in 1971, the ringgit started strengthening, such that in the period from 1973 up to June 1997, in other words, that's a period of 23 years, the exchange rate was 2.5 ringgit per US dollar. So given that long-term experience with very stable exchange rates, and given the fact that the economy was booming, there is no reason to expect the ringgit to start depreciating in value. In fact, if you look at the money that was flowing in from Japan because of the zero interest rate, the only concern was, would the ringgit go to $2 per US dollar? So you could see that there was great optimism. This was the Asia century, and it was the occurrence of the Asian miracle. Foreign banks come to Malaysia and beg Malaysian businesses to borrow money. So the economy boomed, and so there was great optimism. Now, then Thailand, which had mismanaged its economy to a certain extent, but not much, had, I would say, it mismanaged its exchange rate, which it then had to depreciate. So it went from roughly 25 baht to 35 baht. And when that happened, many of the businesses that had borrowed in dollars ended up with debts in baht that were much larger than before. That was 50% larger than before. That means that in terms of local currency, you have just gone bankrupt because your total debt had gone up by 50%. So many Thai businesses were in trouble. But what was most important was the Thai banks had borrowed a lot of money in Japanese yen to relance in baht. So given the depreciation of the baht, the amount of money that they had borrowed just jumped up 50% in baht terms. So they were bankrupt, and the IMF came in, shut down the banks. And when they shut down the banks, that means that ordinary business could no longer get working capital loans. And when it couldn't get working capital loans, the shops started closing. So the atmosphere in July 1997 was that, is there something that we don't understand? In other words, everything was going so well, and all of a sudden, Thailand has gone into difficulties. A lot of foreign investors really cannot tell the difference between Malaysia, Thailand, Philippines, Indonesia. So when they saw the Thai economy was in trouble, they said, well, maybe I should ask for my loan from Malaysia back too. In other words, the Malaysians have been repaying the loan, paying interest, that's no problem. But just to be cautious, I would call back the loan. And when they did that, the Malaysian ringgit started falling. The Malaysian ringgit, which was 2.5 ringgit per US dollar in June 1997, fell to 4.5 ringgit per US dollar by January 1998. Now, this was not unique to Malaysia because the foreign investors and the foreign banks who panicked pulled their money out from everybody. They pulled the money out from Indonesia too. Like the Indonesian rupiah went from 2,500 rupiah per US dollar in June 1997 to 10,000 rupiah in January 1998. So Malaysia's depreciation went from 2.5 to 4.5. The Indonesian went from 2,500 to 10,000, a factor of 4. In our case, a factor of 2. So, and that happened also to Korea. The money that was pulled out of Korea caused the Korean currency to also depreciate greatly. And naturally, when economic disasters like this happen, i.e. the great exchange rate depreciation, someone has to take the blame. And then after finding the scapegoat, we all move on to business as usual. Someone has to take the fall for it.
Yeah. Prafu, I was 16 in 1997, and I remember the impact of it. So I was old enough to see the consequences, or that I was old enough to recognize we were in an economic crisis, but too young to understand the factors that drove it or what caused it. I remember classmates or friends struggling, so families losing their main breadwinner, classmates struggling with financial difficulties at home. How did the crisis manifest in Malaysia? So you talked a little bit about the exchange rate, but when we think about the impact to the economy, talk to me about how it's manifested here and Malaysia's reaction to the crisis, because we famously rejected the IMF program. So walk us through that period of time.
Well, one thing for sure is when a lot of Malaysian banks and the biggest companies in Malaysia had borrowed money from foreign banks because interest rate was 0%. So that was a very rational thing to do. And they borrowed the money and invested it in very sound businesses. And all of a sudden, the bank now say, give me back the loan. So how can you give back the loan? Because the amount that you have to raise in ringgit has almost doubled because you had borrowed it at 2.5 ringgit per US dollar. So you had borrowed in dollars. And now the ringgit has gone to 4 ringgit per dollar. So what the amount that you need to come up with is more than 70% than what you had borrowed in ringgit. And you certainly cannot come up with that amount. So you fall into arrears. And the banks, the Malaysian banks who had arranged that loan, basically became bankrupt because they had underwritten the loans. They had taken back they had borrowed the loans in yen. They gave it to you, and now they're asking for it back, and you cannot give it back. So the banks are in trouble. And when the banks are in trouble, they stop lending in general. So perfectly fine businesses could not get working credit. And when they cannot get working credit, they have to reduce production. And reducing production means laying off people. Now, it is important to note that in this time, there was a lot of chaos outside Malaysia. And this chaos, in turn, undermined investors' confidence. And basically, they say, hold on, I'm not going to expand operation. In fact, I'm going to scale back and see what happens. Now, in the case of Malaysia, the banks basically stopped working because the banks were bankrupt. So they were not lending out money. So that was great difficulties. What usually happens in a democracy when an economic disaster happens, the usual procedure, the usual ritual that appears is whoever was in charge take responsibility for it. He leaves office and somebody takes over. That somebody may do exactly the same thing, but confidence has been revived. And when confidence is revived, business goes back to usual. You could say in the case of Thailand, right after the exchange rate debacle in July 1997, Prime Minister Chavalit was replaced by Chungpa within 4 months. In the case of Korea, when the exchange rate plummeted in November 1997, in the presidential election that was held a month later, the opposition won for the first time. Kim Dae-jung, the perpetual presidential candidate, he has run 3 times before and he's lost each time. He won. Basically, economic crisis delegitimized the incumbent, and there is a change in government, and that business goes back to usual. Now, this happened in Thailand after the middle of 1997, in Korea at the end of 1997, and in the case of Indonesia, when the rupiah had gone from 2,500 to 10,000, Suharto was re-elected to be president for the 7th term. So there was immediate riots in the streets of Jakarta because the elections were seen as unfair. And what happened to the rupiah? The rupiah went from 10,000 rupiah to US dollar to 15,000 rupiah dollars. So Mahathir could see that the economic crisis is going to give rise to lots of economic unhappiness and hence potential political instability. And he realized that if people were to start running out of the ringgit even more, both the stock market in Malaysia will crash as well as the ringgit, because people will be withdrawing money from the stock market and sending it out of the country. When you withdraw money from the stock market crash. When you send it out, the money, the ringgit crash. So to prevent this crash, Mahathir imposed the capital controls on September 1st, 1998. And then, after imposing those controls, he went about restructuring and reorganizing the banks in order for them to start lending money normally again to revive the economy. But it is interesting to note that this action by Mahathir of capital controls was also timed extremely well politically, because the capital controls were imposed on September 1st, 1998. Anwar was dismissed as Deputy Prime Minister on September 2nd, 1998, and immediately demonstrations began in Malaysia. Now, just imagine what would have happened if there were no capital controls in place when the demonstrations began. Because when the demonstrations began in Indonesia in May 1998, people started sending their money out of Indonesia. The stock market started crashing, the exchange rate started crashing, and then the riots got worse, and the army started shooting university students, and it went downhill from them. So Mahathir was able to prevent an economic crash from his political action as well. So that capital control was certainly a masterful stroke in both economic and political terms, and the coincidence of it certainly helped the subsequent recovery of Malaysia.
Right. Well, it may be considered a masterful stroke now, but at that time, I remember it was criticized. So the capital controls, the ringgit pegging, Malaysia's response was considered reckless, was considered isolationist. Talk to me about why they worked when our neighbors, Malaysia's neighbors who accepted IMF assistance, had a harder time in terms of recovery, had more lingering effects of the Asian financial crisis?
The short-term effects were certainly more stabilizing for Malaysia. The long-term, the criticism about Malaysia was that having imposed capital controls, and even though you do remove them after a year or so, people will stop investing in Malaysia in the future. That was the criticism. The criticism was having done it, and you're not allowing people to take their money out when they wanted to, they are never going to put their money in your country again.
Right.
That was the criticism. Now, in retrospect, we see that the amount of money flowing into Malaysia is just as much as that is now flowing into the other Southeast Asian countries. Basically, the capital controls did not destroy foreign investors' confidence in Malaysia. Now, this gives us a chance to recall why Mahathir may have that courage to be such a maverick. Because in May that same year, when Suharto was suffering the consequences of exchange rate depreciation, Hong Kong did something that was so out of character that the whole economics profession thought that Hong Kong was committing economic suicide. What was that?
Yeah.
Hong Kong, as you know, has the reputation of being the capitalists' heaven. In other words, government intervention is minimal. There's free flow of capital, like such that the government has as laissez-faire as you can be, as hands-off. What did Hong Kong do? In May, the Hong Kong has the following currency arrangement. It is pegged to the US dollar. It is pegged at 7.8. So the Hong Kong Hong Kong bank would issue Hong Kong dollars, will issue 7.8 Hong Kong dollars when it has a deposit of $1 US. They have a currency bond arrangement, a link. Speculators speculated against that link. They speculated in the expectation that the government would let the Hong Kong dollar depreciate. Now, if you were a speculator and you expect Hong Kong's currency to depreciate from 7.8 to, let's say, 10, that's what you expect to happen. What should one do in order to make a lot of money? What one could do is to go to a Hong Kong bank, times are still pretty normal now, and borrow as much as you can in Hong Kong dollars and swap all of it into US dollars and take it out. So what happens is, for people who wanted to speculate against the Hong Kong dollars, what you want to do is first borrow a lot of Hong Kong dollar denominated debt from the banks, buy dollar, and move it up. And if you want to make even more money, you offer to sell Hong Kong dollars in the future at, let's say, 8.8 to a US dollar, as opposed to the 7.8 you see now. In other words, you do what you call, you sell short.
Yeah.
Now, all I got to do now is to start a run out of Hong Kong dollar into the dollar. So I start telling people the renminbi is going to depreciate. In fact, if you look at the Hong Kong's, look at the amount of money leaving Hong Kong, you'll be stupid not to take your money out of Hong Kong. So in such a situation, if people do get afraid, they would liquidate their stocks. So the stock market would fall. And then they would take the money they've liquidated and take it out of Hong Kong. And then the Hong Kong exchange rate would be under threat to devalue. So if enough people do it, it will force a devaluation. So the Hong Kong government sees this move by the speculators, the hedge funds. So the Hong Kong government, the Hong Kong monetary authorities, went into the stock market and started buying shares.
Oh.
In most countries in the world, central banks are expressly forbidden from buying shares. Why? Because shares are ownership documents. And how do you, let us say Bank Negara starts buying Malaysian shares. What does Bank Negara need to do? It needs to run the printing press with the picture of our respected king. And with that picture, they can get the ownership certificate of the company. And basically, you have exchanged paper for a real company. That is a good deal. So most central banks in the world are expressly forbidden from buying equities because that is nationalization, the government grabbing your company legally. And this is the Monetary Authority of Hong Kong. Start buying shares. So everybody says, this is more than communism. This is downright confiscation. In fact, they bought over 7% of the Hang Seng Index. They spent a tremendous amount. Now, when they bought all of these shares in the Hang Seng Index, because when people sell, and if someone willingly buy it, then the price doesn't go down. The price, you hold the price. In fact, if they want to buy more, if the central bank wants to buy even more, that can only push the price up. And so people didn't panic. They saw that the stock market was steady. And since they didn't panic, they didn't send their money out. Now, what happened to all these speculators who had borrowed lots of Hong Kong dollars? Well, they have to pay interest on that loan, you know. And usually they borrow it for 30 days, short-term loans. So when the stock market failed to collapse and the Hong Kong dollar failed to collapse, and it's time to bring back the money. So when they bring back the money, the pressure on the depreciation had disappeared. So Mahathir saw that this very unconventional move in Hong Kong worked. Basically, you cannot just go by some mantra, some simple one-liner, never interfere with the market. Well, it depends on whether the market is misbehaving, is being manipulated. And so what he did was, yes, out of the ordinary, but that was after what Hong Kong did was truly extraordinary. It was a violation of all the principles of capitalism. The government buying into a business directly on the stock market. So now, after, I think within 5 years, the IMF admitted that what Malaysia did then was the right step. Basically, if the market had continued to collapse, basically, there was a panic going on. When a panic is happening, you need to stabilize things because a panic feeds on itself. And by the time it stops feeding on itself, it's because the economy is really basically face down in the ground. And we were able to prevent that.
Right.
That is possibly a very good move, but there was another move in which we did in the Asian financial crisis, which has a very terrible negative effect that is with us today.
Which is?
And, well, there were two things we did. One was we refused to let people take their money out. So the ringgit held steady. The other thing was because the ringgit, as you know, when Mahathir pegged it, he pegged it at 3.8. That was what he pegged it at on September 1st, 1998. But the ringgit used to be 2.5. So for people who had borrowed dollars at 2.5 per US dollar, now that US dollar has basically gone up a lot in ringgit terms. So a lot of the banks were just bankrupt. And when banks are bankrupt, they don't lend money. Then the life blood, the blood that circulates in the economic body stops flowing. So production is at a standstill. So you got to get the banks working again. And in order to get the banks working again, you got to recapitalize them. The government has to put in new capital so that they are now solvent, and then they can do the usual business. Now, in Malaysia at that time, we had roughly 48 banks. And to recapitalize 48 banks is, of course, a bigger job than recapitalizing 10 banks. So to make the job easy, Tun Dime forced the merger of these 48 banks into 10 banks, 4 of which were taken over by the government. So all the small and medium banks disappeared. We now have only big banks. And today, these banks have gotten even bigger because from 10, now they have been reduced to 8. So that makes it easy for us to recapitalize the banks because we got only 10 of them to have to supervise. But the trouble with that is that what is the difference between a big bank and a small bank? The difference between a big bank and a small bank is who their customers are. Now, when a bank lends out money, the amount of paperwork you do when you make a $1 million loan versus making a $10 million loan, the paperwork is the same. So if you make only $1 million loans, you have to make 10 of them to equal one $10 million loan. So all banks in the world like to lend to big boys, big companies. They don't like to lend to small companies. So everybody loves the big companies, but the big companies love only the big banks. Largely, they need specialized services like in foreign exchange, treasury management, that smaller banks don't have the expertise to do, and they cannot supply that kind of service. So, given the fact that the big boys don't want to deal with the small banks, that the big companies don't deal with small banks, then what do the small banks have to do? They will have to cater to the less preferred customers. The less preferred customers are the small and medium enterprises.
Yes.
So they are the ones who would be using the small and medium banks. As you could see, that of these 48 banks, at least 30 of them were catering to the small and medium enterprises. So after the forced merger of all these banks from 48 to 10, all of a sudden, the small medium enterprises started having trouble getting working capital loans. What working capital loans operate like the following. Suppose I've shipped my goods off and I get my customers pay me back in 90 days. And what happened is when they pay me back, then I order goods and pay my workers and so forth. But what if a few of them are late in paying me their bills? If they're late in paying me my bills, I will have to borrow from somebody to cover that interval. And that's where the small, medium banks used to do. But now they are no longer there. So the small and medium enterprises started having working capital problems, which is why in 2004 or 2005, 2005 I think, Pakla set up an SME bank to meet them. But the SME bank is a government bank, which means the government has to put the capital in it. And how much money can a government put into a bank? Because how does a bank lend money? The bank puts in some capital, but then the bank takes in deposits, pull in all this private money, and then it lends out the deposits. Whereas the SME bank doesn't pull in much deposits, and so there's not much to lend out. So it really didn't make a big difference. So that is a big crisis in terms of getting working capital for SMEs that have remained with us and gotten worse since the merger of the banks in 1998. This is why on most lampposts we see in Malaysia, a phone number and say, you need money, call me. All these alongs are doing illegal money lending, which is dangerous for them. But it is because they are able to get such high interest from desperate SMEs. And they are willing to take the risk to do that. So here is the fact about Malaysia. In every country in the world, the number of small firms exceed the number of medium-sized firms. The number of medium-sized firms exceed the number of large firms. You get a pyramid shape. In Malaysia, we don't have a pyramid shape. The number of large firms exceed the number of medium-sized firms. And not only that, if you look at the proportion, because the total number of firms increase over time naturally as the economy grows. So the absolute numbers always grow. So let's look at the percentage of firms that are medium-sized. The percentage of medium-sized firms has been declining over time, which means that you could say perhaps they all grow into large firms. That's why they're declining over time. Then the question is, why don't the small firms grow into the medium firms, right? If that's a pyramid, as the medium firms grow large, the small one goes to the medium. But the small ones are not growing to medium. So is it possible that the medium of whatever that was there was growing to large? The answer is no. The large number of large firms have grown in Malaysia because we are a country with a lot of FDIs. And when FDI comes in, they set up big factories. They don't set up little workshops, SME size operations. And the second thing is, when there's a new high-tech business that needs to be done, an existing domestic conglomerate would set up a big company to enter into the new business. So we have, in a way, blocked business mobility in Malaysia because of our refusal to issue any more license to small and medium banks. And if these firms cannot get working capital, they clearly cannot get investment capital. They are unable to modernize. That's why if you look at the productivity gap between large firms and medium-sized firms, the productivity gap has been growing steadily over time. And what is even worse, there are two bad things going on because of what we did during Asian financial crisis, which has blocked capital to the small, medium enterprises. One is that we are trying to decarbonize the economy. To decarbonize the economy means that they have to buy new equipment. And if they have not been able to get working capital, they are not going to be able to borrow the money to decarbonize. So this environmental action is helping to drive them out of business. That's number one. Number two is that because the United States is now refusing to buy goods from China, many multinational corporations and the US is turning to Southeast Asia to buy goods instead. And because they want to buy more goods in Southeast Asia, who are going to make the goods for them? Should it be our SMEs that expand and hence export? Or should it be FDI that comes in and produce to meet this increased demand for exports from the United States? And unless we restore the small and medium financial institutions to help the small and medium enterprises, we are basically letting the decarbonization efforts help to eliminate our SMEs. Mm-hmm. And we are also allowing the increased demand for Malaysian exports to be made by FDI coming into Malaysia. Now, when I talk about this, people said, oh, we have now set up internet banking, lending platform. So the SMEs will be able to get their funds from these internet banks. There are two reasons why that's not a serious answer. One is, look at the size of the internet banks. They are very small. So they cannot cater to that demand, number one. Or they won't make much of a difference. Number two, it is like saying the following. We have this medicine for cancer that works. And for the rich and powerful, we will give them this proven medicine that works. That means normal banking. But for the small, weak firms, we will give them this new experimental medicine. And which means that we will not give them the traditional banking services. We will give them this online banking to do. Right. The trouble is, the common argument against giving up banking licenses to small and medium banks is that they fail more often. Small firms fail more frequently than large firms. That is a fact. But that is the difference. When a small and medium bank fail, it is not a threat to the economy. But when a big bank like Malayan banking fails, you can bet it will bring down the economy with it. So they are not a danger other than a licensing nuisance to Bank Negara Malaysia that they have to actually go whack through all of these banking applications. The truth is, small and medium banks are not a threat to the financial stability of Malaysia. It is the large banks. And if we want to promote social mobility, there's no better way than for small businesses to be able to grow to medium businesses and medium businesses to grow into large businesses. And nobody would say that this is not a fair way of getting rich. It's not like you got a preferential government treatment and hence you got rich. It's because you were able to run your business well and you grew from small to medium and so forth. And so I think one reason why the investment rate in Malaysia has fallen so much since the Asian financial crisis, domestic investment I'm talking about, is because the SMEs cannot find investment funds, and the inability to get working capital means that they are not making as much money as they otherwise could have. This is the terrible long-run consequence of the Asian financial crisis because of the way we are responding to it. The capital controls have come and gone. We stopped issuing small and medium bank licenses at that time, and we have not bothered
Never.
to resume. I think it is time to rethink about that than to say that let them use the online banks.
Wow, the lasting effects of decisions made during the Asian financial crisis. Prof. Wu, I think we'll leave it here for this episode, but thank you so much for getting real about US, China, everyone, everything in between, especially about the Asian financial crisis. We will be back with more on this, on the crisis, especially how it's affected regional countries, regional economies. But for now, that's it from Wu Says. I'm Melisa Idris, and I will see you in the next one. Bye-bye, folks.